Hello, good morning, everybody. Today we are going to look through UOB's third quarter earnings and explain why that the share price actually declined by 1.7% following the announcement of an upbeat earning. So the devil are in the details. I would like to highlight to you just two slides. I've spent the whole morning looking at this, honestly. Okay, so on a Q-on-Q basis, we are seeing that the earnings are actually down 4%, although that on a year-on-year basis, it's up 8%. And this is largely because of this total allowance. So UOB Bank has to set aside a much higher allowance comparing to a quarter before because its asset quality is deteriorating. I suspect that is largely because of rising non-performing loan in the manufacturing and trade-related segment. And this is one thing. Another thing is net interest margin, because that net interest margin is a key measurement of bank's profitability because more than 60% of bank's total sales income come from that net interest income. So look at this red line, which shows UOB's net interest margin. It actually declined by 4 pips from the quarter before to 1.77. And if you look at this is trending lower as UOB is very sensitive to the interest rate environment, and right now the loan market is getting very, very competitive. So going forward, I will see that the net interest margin for UOB is going to be further compressed because the Federal's 3 rate cuts will come in at a lag effect. Usually it takes 2 to 3 quarters for the rate cut to be fully reflected in the bank's earnings. So this net interest margin is probably going to drop in the quarters to come. And plus, Singapore's economy is right now growing at 0.1% in the third quarter, so that cyclical downturn and trade uncertainties is going to probably put more pressure on banks' asset quality going forward. So that's for UOB. Then let's come back to the platform. Look at UOB's chart. It's pretty resilient, I would say. The price didn't really move much in the last 12 months, and this is largely because it's more of a value stock rather than growth stock. The 3 local banks, their current valuation are very similar, between 10 to 11 times price to earning ratio, not crazy, quite reasonable, and they are giving an average dividend yield of 4.5%. So right now, look at bank deposit rate and the interest rates are still trending lower. 4.5% dividend yield with a track record is pretty decent. So I think even though the market says banks' profitability are going to be squeezed or compressed, a decent dividend yield is still cushioning the downside for the 3 local banks. Besides of UOB, let's take a look at DBS. The price also came off from the highest level in 2018, from $30 now to $25. So DBS has revised its dividend policy to pay out quarterly, every quarter 30 cents. So that gives that translates to a dividend yield of more than 4.5%, also pretty decent. Besides of that, I think today we are going to pay more attention to the political risk as U.S. Congress, they have started a new impeachment inquiry phase for President Trump, and he's going to face a public hearing in the weeks to come. So that creates a lot of political uncertainty and also might undermine his ability to negotiate a trade deal with China. Okay, so that's all for today's earnings update and market outlook. Hope you all enjoy trading and happy Friday.